Good morning, everybody. Welcome to today's midweek update. Man, the market really took a big shake yesterday. Let's take a look at the market. We'll take a look at the market. We'll take a look at stocks. We'll take a look at some of the actions that I ended up taking yesterday. So let's dive in. And as always, as you guys have questions, I want you to type them into the chat and let me know what you're thinking and how I can help. So here's the markets as of, well, right now. So we have the S&P 500, the NASDAQ, the New York Stock Exchange over here, the Russell 2000, the Dow, and we even have the IBD 50 down here. So the reason why I like to take a look at these all at the same time is because it lets me know, are things moving together or are they moving one way and something else is moving the other way? When things are moving together, we start to get smoother moves overall. And yesterday and now today, we're getting a little bit of smoother moves, even though it was to the downside yesterday. Now, we got the strong move to the downside yesterday. We're getting some rebounding action today. And coming into today, there wasn't a ton of stocks that were setting up. In fact, the one idea that looked halfway decent coming in to today, I just posted this one over on Twitter. I mentioned it yesterday in our report, was this one right here, PODD. And let me turn off the annotations here so you can see it a little bit clearer. And I'll zoom in. Well, we'll start over here on the daily time frame, and then we'll zoom out to the weekly time frame. So here's what things look like on the daily. Price action broke out in a meaningful way this morning. Had an uptick in volume. The relative strength line is poking into new highs. New highs is at a new 52-week high. It's getting there. It's certainly the high for the last couple of months. It's right about where it was in February. But prices breaking out, meaningful move here. And you can see how this move developed on volume. Price started to make the turn, as my friend Mark Minervini likes to say, it's making the turn. What does making the turn mean? It means that we were transitioning out of a stage one and transitioning into stage two. If you guys were here yesterday for the stage analysis talk, then you know what I mean. If you weren't and you've already read Stan Weinstein's work, then you probably also know what I mean. But basically, what it means is that this stock was in a period where price was basing for a long time. You could tell that by how the price action was moving sideways, and also where price was in relation to a couple of moving averages, namely that red line and the gray line, the 50-day moving average and the 200-day moving average. Now, what happened is price is starting to break out of that range, right? You see this big spike up, that's today. It's starting to break out of that range, and now the moving averages are starting to turn up. So that's a sign that, yeah, things are changing, and it's starting to get into more of this accumulation stage, more of this uptrend, more of this momentum. And the thing that was good about it for today was this over here. How did price break out? One of the things that I like to see when price breaks out is an uptick in volume. Sometimes you get it, sometimes you don't get it. Today we got it. When price broke out over here, and this is a 30-minute chart, well, an indicator that I like is this dollar volume indicator. Now, what's so special about this? Notice the colors, right? Some of the bars down there are blue. What's that mean? That means that volume was above average for that particular point in time. So if we went back in time yesterday, day before that, a couple of weeks, volume was above average for this first 30 minutes, first 30 minutes of the day. Then it spiked again over here at the 10:30 mark. So it's showing that there's somebody with deep pockets that's stepping in and buying the stock. And we know that they're buying because price is moving up. Simple as that. I love reading charts. And the reason why I love reading charts is because it's showing what's actually happening. It's showing the decisions that people are actually making. And it's showing us supply and demand right here in our face. So we don't need to wait for what's happening in the news to come out. There was something yesterday that came out on NVIDIA. Did you guys hear about this? Did you hear about this on NVIDIA? I posted it. I retweeted it, or I mentioned something on Twitter yesterday, or X, I should say. I keep on calling it Twitter. It's bad. But well, let me see if I can find this tweet, and I'll share it with you guys. Yeah, here it is. Here it is. It's this right here. Did you guys see this yesterday? U.S. Department of Justice sent out a subpoena to NVIDIA related to antitrust investigation. And that was the move that happened, right? Let's take a look at NVIDIA now. So NVIDIA was down about 9.5% today on news. So let me ask you this. Do you think that people knew about that news ahead of time? Maybe they did, maybe they didn't. Did you know about it ahead of time? I didn't. Did you need to? I think that's the bigger question here. Because if you had a couple of sell rules, you could have gotten out pretty easily. You could have gotten out on a move below the 50-day moving average that happens on volume. That would have gotten you out. If you're somebody that likes to wait until the end of the week to see, well, maybe it recovers by the end of the week. Well, price is still below the 50-day moving average there. That could have gotten you out. You could have also taken a look at some danger signals, right? If we turn on the danger signal indicator, we come over to this bar, and we see how many danger signals there were. You have 11 danger signals that would have gotten you out in a hurry. For me, when I see 6 danger signals, it prompts me to start taking action, whether it's to raise a stop, whether it, depending on where I'm at in the trade, I might exit the position altogether. But plenty of reasons to exit NVIDIA back here versus waiting for it to drop like it did the last couple of days here. Now we're getting a little bit of a reversal, but NVIDIA has some work to do before it becomes viable again. Let me know what questions you guys have. Go ahead, type into the chat. Let me know what questions you guys have. Let me know that you're alive out there, that you're alive and well, and well, let's keep going well with some of the thoughts and the analysis here. So we spoke about NVIDIA. We spoke about PODD. This one, again, rocking and rolling. Trade that I took yesterday, that I added to yesterday, was this one here, VIRT. I had started a position in VIRT way back here when it had this pullback. And one of the things that I like to see when stocks pull back is that they have a nice upside reversal that happens on volume. So that happened right there, right on this bar. And so buying the follow through day, I bought that right here. And I added to it yesterday as price broke out. Now, why would I add to it there? The reason why I added to it was because it formed another pattern that I'm interested in. It formed this VCP, volatility contraction pattern. You can see how price had one contraction here, then it had another contraction, and then had another contraction and then broke out, and it broke out on above average volume. So all those things add up to, hey, there's more buyers than sellers at this point. Prices breaking into new 52-week highs, and the buyers are in control. So I want to hop in and be a part of the ride. So rather than waiting for the news or something else to happen, this tells me exactly where I should get in as price breaks out, and where should I place my stop loss in case if things don't turn out so well, right below support, which was right down here. So that's what I'm doing with VIRT. And by the way, if you guys are interested in taking a free 2-week trial to our research program, just type into the chat, and actually I will drop a link into the chat too, so that way you guys can go check that out, and I'll put the link in the bio. I'll do that later on, or in the description of, well, wherever it is that you guys are watching. But get the questions in. Get the questions in. Let me know what thoughts you guys have on this. There's not a ton else to really go through here. Just seeing where that link is. Here's a link. Alrighty, so go check that out. That's the research program. Again, took this trade yesterday. This one here, I didn't trade this. I wanted to wait, but I did have an alert set. I did tell members about this one, and we did talk about it in yesterday's report. So hopefully, well, yeah, hopefully some of the members were able to take advantage of this one. But also, here's another thing that I like to do, especially when I'm setting an alert. So if I set an alert on a trade and price breaks out, and I take that trade, I'll see how the price structure is on that day. So at this point, it gave a tighter entry. And you could have set a stop right below this low as price was breaking out, because there was this little, and it is little, upside reversal bar on the day. So you could set a stop right there. So far, this trade has made about 1.5 times the risk. So you could get your stop to break even, and then it's just a matter of riding the rest of the trade and see how it does from here. But the market is in a very choppy area. There were a couple of trades that we talked about. There's not a ton of great looking stocks out there, right? Here's some of what was on the list yesterday. And let's turn off some of these indicators and such, so that way you could see what things were. But there wasn't a ton. This is still moving sideways. PRMW, Bioventus, still moving sideways. It's actually starting to look better here. This is a flag. TW, not a whole lot of movement. Mohawk, not a ton. Eli Lilly, just consolidating below the recent highs. Axe still consolidating. I actually think that this consolidation is good. But when stocks start to chop around and consolidate, in the moment, and I get this, right? I understand, because I used to have the same kind of feelings. It might be, you start to feel like, man, I really wish the market could get going. I want to try to make some money here. It's this kind of choppy back and forth action that makes the best opportunities. but we've got to be patient. We've got to let it play out. So, how do you deal with, man, I want to make money today while you're telling me I've got to sit and wait? The way that you deal with it is to understand that this is all one big math problem, right? So hopefully you're a fan of math, but that this is all odds, it's all probabilities. So you build a trading system for yourself, right? What you're building, it should give you an edge, but it's something that's not going to win all the time. It's going to win over time, right? That means that if you have 100 trades, you put money into 100 trades, you expect to come out with more money than what you started. That doesn't mean that you're going to win on every single trade. It doesn't mean that you're never going to have a losing streak. It You'll probably end up with both winning streaks and losing streaks. A winning streak does not mean that you've turned the corner. It doesn't mean that now all of a sudden you're a great trader. If you're trading well, meaning that you have a process and you're following your process to a T, then a streak just means or could mean that you're following your process, right? Because you will have both winning streaks and losing streaks in your trading. So, what you need to do is take a step back, look at the bigger picture, and understand that the math is going to be the math. And what you need to do is to execute your plan, execute the process, and the math will take care of itself. Now, relating it back to what we're seeing here, where with these stocks that are basically chopping around, going nowhere, it's a time for patience because it's these kinds of go nowhere moves that are going to build the bases that'll lead to the bigger moves later on. We 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 generally see this happen in September, right? If you've observed this happen in September before, let me know, type into the chat. It's maybe you've maybe you've heard of it. If you've heard of it, type into the chat. I want to hear from you guys. You guys are pretty quiet right now. But it's one thing to hear people say on social media or whatever you're listening to that, oh yeah, September is the toughest month in the year, and it's another thing to go back in time and look at the charts, and if you're new, I do recommend that you go back in time and look at the charts and see, well, what was happening back here, right? Well, I'm pulling up the monthly charts now. What was happening in September of last year? Right? Here's September of last year. Market looked like it was getting ready to go, and then all of a sudden, September, wham, back down to the lows. Then you have October, similar action. Then you took off in November from last year, and it's been on this tear since then. What about prior September? Right? Come back over to 22. Another week, month. Right? So you start to get a feel of, okay, maybe there's something to this September thing, right? When you start to think about, well, what's going on right now? Well, we do have elections right around the corner, right? And uncertainty isn't something that the market generally favors, right? Well, where it likes to have certainty in the market, like that, it's different. Uncertain. It's not the certainty that you know where price is going, but when there's uh, things like we don't know who's the president's going to be, we don't know what the policies are necessarily going to be next year. It's those kind of things that could lead to some of this whipsaw, and that whipsaw is what makes some of these wider and looser patterns. If you're trading something like this, like let's say that you were in a stock like on, and now all of a sudden, well, now it's down 1%, but at one point, if you were in this, let's say you were there yesterday, at one point you were down 9% today. That's not a whole lot of fun. But are you going to hold through that? Are you going to sell it? Are you a professional where you might say, "Oh, you know what? Here's a support line, and maybe I'm buying right off of that as it's reversing higher." Maybe that's you. What happens to most of us, and I was in this boat, was the guy that would draw the lines all over the charts and try to be like, "Yeah, you know what? I am a professional. I see these guys. I see them drawing lines all over the place, and I see this guy talking on Twitter or X or whatever you want to call it. I see this other guy talking on Instagram. Yeah, I could do that. That seems pretty easy." And then you try to do it, and then you end up losing money in the process. And the reason why you end up losing money in the process is because the reality is that you end up taking trades that are not in your system. You're trying to be something or do something that isn't a business. And businesses make money. Gamblers don't make money. Businesses make money. Now you could have a trading business, you could have a gambling business, but when you're operating like a business, then that means that you have a specific process, you have specific rules that you're going to follow, and your job is to execute, right? It's not to be like, oh, well, how and where am I going to make money today? No, you need to follow a plan. You need to execute your process. Now, there's something else that you could go and grab that will help you with your business. I wasn't planning on talking about this today, but since we're here, uh, might as well. Here's the link to my latest book, The Trading Success Blueprint. It's going to teach you how to write a business plan for your trading and how to outline it, how to put it all together, and it's something that you'll be able to do. You don't need to be an MBA or have a business background in order to write a business plan for your trading. All the stuff that you need, it's right in there. It's in plain English, and you'll be able to get it. So go check out that link and let me know what other questions you guys have. I'm gonna take a sip of coffee while I'm waiting for you guys. All right. So I'm gonna put this banner over here, this little ticker thing. Leave a comment. Let us know that you're live. We've got 54 people watching right now over on X. Well, we've got a few people watching over on YouTube. We've got some people watching over on Facebook. You mean to tell me that nobody can drop a comment? Let me know that you guys are out there. I'm worried about you guys. Maybe something happened. Let me know that you guys are out there. Type into the chat. Just say hello. Anyhow. All right. If there's no other questions or comments, then we'll call it a day. We'll wrap things up here. So, want to say thank you guys for tuning in and watching. You guys were quiet today, but that's okay. Hopefully, you're getting value. I assume you are. If you're still tuned in, it looks like everybody's still here that started with us. So, hopefully, you take this information, you do something with it. I want to see you guys succeed. If you have questions, if you think of questions later on, just reach out to me on whatever platform you happen to be watching this on. I do my best to answer all the questions that come in, all the comments, and I'm trying to do a better job of thinking what it was like back when I was getting started and trying to put all this stuff together because it is a lot of stuff. Well, we went through a whole bunch of books yesterday. I've got them all on that wall back there, right? I've written a couple of them now, but uh, books like How to Make Money in Stocks by William O'Neill, books like Think and Trade Like a Champion from Mark Minervini, Momentum Masters from Mark Minervini, Super Trader by Van Tharp. We've got Stan Weinstein's Secrets for Profiting in Bull and Bear Markets. It's a lot of reading to do. It's a lot of reading. I wouldn't expect to master trading in a couple of weeks, a couple of months, even a couple of years. A lot of people think that it's that easy. A lot of people on social media will talk like it's that easy. It's not. A lot of people don't talk about the hard stuff, the blow ups, the mistakes. When you're putting your hard-earned money on the line, and somebody on X had this question earlier, and I replied to them. I don't know if they saw it yet, but somebody was asking about should they have all their money in their brokerage account, or should they break it up and have a separate emergency fund. And my answer to that was, well, yeah, you should definitely break it up, or at least here are the benefits of breaking up your accounts and having separate funds for an emergency fund, a trading fund, and whatever other funds that you want to have. Well, what it does for you is that it gives you more mental bandwidth. Here's what I mean. If you have all your money in one pot, might sound good at first. It might be like, yeah, you know what? Now I've got a lot more money to trade with and I can grow it a lot faster. And those things are true. And it sounds good at the time. What isn't so good is when an emergency does happen. Right? Like, so let's say that you've got 90 grand, 100 grand, and you need $10,000, let's say, for emergency comes up. Let's say you're a homeowner. Let's say that you need 20 grand. Let's say that you need to repair your roof. Let's say that you need to, I don't know, your central air goes out. Let's say that you need, I don't know, you just had a birth of a child and you just found out that you need to pay for daycare, and daycare costs 15 or 20 grand. Yep, it's if you live in New York, it's that much. Let's say that those things come up and you weren't expecting them. If you have an emergency fund, well, just use the emergency fund. That's what it's there for. If you don't, and you need to go dip into the brokerage account, then all sorts of thoughts and feelings and emotions can come into play where it's like, oh man, well, I don't want to touch that money. I'm trying to grow it. There's another opportunity coming. Let's say you're fully invested. Well, what am I going to sell off in order to do this? And now you're doing with those decisions and the big domino effect of what happens after you sell that trade. Maybe you sell the wrong trade, and you're like, then you're kicking yourself. All of that can be avoided by breaking your account into separate funds, right? So just have a dedicated fund that's going to be for emergencies, a dedicated fund that you're going to trade with, a dedicated fund for household expenses, dedicated fund for maybe your vacation fund, a dedicated fund. And then this is something that I started to do within the past year or so, is having dedicated funds for giving, for charitable giving. So donating to church, donating to once a quarter, we donate to different places. Uh, Another envelope for spontaneous giving, right? So just keep it in separate from everything else. It makes it a lot easier. So that way, when you need the money, it's there. You just go and you use it. And while it might feel appealing to take all the money, put it into one spot and try to grow it faster in a trading account. It really there's a lot more cons to it than positives. So anyhow, we are out of time. Hopefully you got a bit out of that little rant there at the end. Uh, Again, let me know if you have any questions or comments or thoughts on any of the stuff. I love helping you guys out. That's why I'm here. Enjoy the rest of your day, and I'll see you back here. Well, what's the next thing that we're doing? Oh, yes, so on Friday, we will be interviewing one of my former clients, Arthur Smelyansky. I hope I pronounced your name correctly, Arthur. If not, I apologize. But Arthur is coming on the show. He was a client, came on. He went on to place ninth in the U.S. Investing Championship. He is now opening his own hedge fund, and we'll be chatting with him on Friday. Really looking forward to that conversation. Anyhow, guys, take care, much love, and God bless.